Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar strengthened as the US dollar hit its lowest level since November 2024 as economic data showed a slowdown in US job market. The ADP reported just 77,000 new jobs was added in February, well below the 140,000 job forecast. While the US manufacturing PMI dropped to 50.3, slightly missing the expectations. As investors now closely monitor Friday's February non-farm payrolls report for further signs of labour market weakness. Along with that, we get Fed Chairman Powell's speech providing additional insights into monetary policy. As we can see now, there is some evidence of profit-taking returning as long as the market holds above the key support level, which is where the 60-day moving average is, around 62, 60, 65. Overall, I feel the market has potential to eventually reach the area of 64 to 65 cents and reassess. The euro dollar surged above 108 on Thursday, hitting its highest level in 4 months, following the European Central Bank, or the ECB's 25-point interest rate cut to 2.5%, marking its 6th rate reduction since June. Meanwhile, as I mentioned, the dollar fell to its lowest level since November 24, that's around 104.10. Now keep an eye on this pattern. This is a shooting star, and if we do see further weakness, the market needs to break below this level, seen somewhere around 106.90 to support the candle and the bearishness back towards this level that's seen where the trend is around 106. Given how strong the market's rallied, it is time for a pullback, but keep an eye on this level at 106.90 just in case we see the break, but it does appear unlikely. As overall, I feel the market has further potential to the upside and could reach 109. It was all cheers for dollar yen. It crushes the level at 148.70 and now paves the way lower and likely to reach the objective of 144 with the immediate target seen around 147 to 146. I like the way this market is structured in terms of the bearish candles and the indicators, so therefore a little room is seen for the upside and likely find a cap around 148.65. Sterling still remains strong and steady since it's reached its objective of the inverse head and shoulders, as I mentioned yesterday. Given the bottom to the top and the break of the neckline, I was looking for 129 and we've reached that. Therefore, in the short term, I'm now neutral and awaiting further direction in terms of how the market may perform. However, the ADX is still strong, so we could see further upside tests. Wrapping up with commodities, well, a little bit of profit taking coming back into play here around 2,934. But I feel the market is likely to show bullish signs again as we weaken off, but likely to see support around the region of 2,900 or around 2,880. Overall, I feel the upside call still remains at $2,950 to $3,000 an ounce. Turning to oil, little was seen in terms of movement and therefore consolidating around that 66 mark. Given how weak the market is and taking out that key level, I'm sitting neutral at the moment and assessing where the next move may be. I would like to see further gains and a break back above the level of 67.20 to give the bullish call, but it's still uncertainty out there at present. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new weekend.